Good morning, Janice.
Good morning, Anthony.
Let's cover today, why does probate take so long? And this one is the tax clearance explanation. So the second most common question about probate is, why does probate take so long? And sort of everyone knows that it takes a long time, but kind of nobody really quite understands the exact reasons. And it could be many reasons, whether the court's dragging its feet or we have a GAL that is just a total slacker. I mean, there's a lot of reasons. But lately, one of the biggest culprits is just getting that final tax clearance.
Boy, do I agree with you. So today we will discuss why this tax clearance is so important, estate tax on the 1%, the IRS and the deceased's 1040. See you next April, and don't forget Form 5495.
Cool. Let's jump right into it and start off with why tax clearance is so important. So the underlying principle is that executors are personally liable for everything that transacts within the estate. And what that bottom line means is if you forget to pay a tax, or if there's a tax bill lingering out there that you just didn't know about, and you've already distributed the inheritance to all the heirs, number one, it's highly unlikely they're going to give the money back.
Yeah, not happening.
Number two, that means the IRS doesn't just say, oh, okay, well, you tried your best. They come after you because it's not their responsibility to track down the 13 cousins who are heirs. The way the checks and balances and the duties and responsibilities works is the executor is the only person they have to look to get their tax money, right?
Right.
So from the executor's point of view, if you know that you are ultimately on the hook, no matter what, you want to make sure everything is fully and finally paid before you send out a dime to the heirs. Does that make sense?
It does. Could you explain a little bit about what this actual tax clearance is? Like, is it a piece of paper? Is it a party? I mean, what are we waiting on in particular?
Well, we're gonna get into that at the very end when we talk about Form 5495. But bottom line is, you want. For now, we're just going to call it clearance from either the IRS or the state or local taxing authorities that there's no more tax due for this estate. That's what you're looking to get here.
Very good.
So let me give one exception to when this is not that important. And that's when the executor is also the sole heir. And it doesn't really matter, because if you're the sole heir and you kind of forget to pay the taxes or forget to get full final tax clearance, and you distribute to yourself, the $100,000 from Aunt Mabel's estate. If the IRS comes back to you later and says, "Hey, you owe us, $5,000, $10,000 for unpaid taxes," whether or not you're the executor or the heir, they're going to come after you. So it kind of doesn't matter in that situation. So that's the exception that proves the rule. Yeah,
absolutely.
Okay, next, estate tax on the 1%. So I'm pointing out that what we're talking about for the most part, for most people, is income tax and other tax liabilities, and not the sort of estate tax or death tax that a lot of people hear about. So the estate tax is if you're not familiar, is a tax on your net worth when you die, right? But it only applies if you have, as of now, over $11 million of net worth. Okay. So this is truly like a 1% tax, meaning I don't mean it's a 1% rate, but rather for only 1% of the population.
The top 1%. So not me, probably not you. It's that 1%. Yeah.
Yeah. So my point is that we're not really talking about that estate tax or that tax that people talk about as the death tax or estate tax. I mean, it is a big risk. When that does apply, you take it very seriously, hire an attorney, team of accountants, and just make sure that's that's squared away. And it does cause delays in the settling of a larger estate. But this podcast or this episode, I'm directing to basically the other 99% of us.
The 99. the rest of the world, yes.
We all file our taxes every year. If we have a small business, we have payroll tax. Those are the taxes that we can get really nicked with if we forget or don't get full clearance on before we close the estate. All right. So let's move on to the IRS and the deceased's 1040. So Janice, let's say you're the IRS and you find out that Joe Smith has passed away. Do you just kind of say, oh, please accept my condolences and, move on, family? Or do you say, hey, wait a second, Joe Smith.
Wait a minute.
Did you owe us anything? I just want to double check.
since you're divvying out money, let's really look into this.
Exactly. The IRS and the states, they thoroughly review decedents' returns. And the reason why is they know that this is their last chance.
This is it.
Yeah. This is the last bite at the apple, as it were. So they are looking, when you file, so the way it works is when you file your, a decedent's final 1040, you may have not noticed this on TurboTax or if you do it by hand, there's a little checkbox at the top near your name. It's like on one of the first lines of the 1040, and it says, is this a deceased person's return? They want to know if this is something that they need to take an extra close look at. So once the IRS knows that this is somebody who's passed away and this is it, this is the final return, they're going to take a really close Sherlock Holmes magnifying glass close look
fine-tooth comb.
Exactly, at this return and the past 3 returns, the auditable period. So it's not, so for anyone who's thinking, oh, what? I do TurboTax or H&R Block or whatever every year. What's the problem? Why are taxes so complicated when somebody passes away? It's not so complicated, but it's rather the review process is potentially more complicated. If that makes sense, yeah?
Absolutely. They're going to go back through the one that you just turned in and everything a little bit behind there.
Yeah. Okay. So another reason why it takes quote unquote so long is because of the tax filing cadence or timelines, right? So think about it. If somebody passed away and let's say died in January of this year, 2020, right?
Yes.
And we liquidate some IRAs and we sell a house, in the next few months. Where do we report those transactions? Right? We report them on the 2020 tax return, which is filed when?
2021.
April 15th of 2021. So even though it feels like we were done, quote unquote, within the first few months of 2020, we won't report those transactions to the IRS until next April, or if we're, very prompt, next March or whatever. And then we still need to wait, and we'll get into this next, for the IRS to sort of bless or clear those transactions. So right there, you're talking about another year, just because of the way the timetables worked. Does that make sense?
It absolutely does, yeah. I mean, that's like your taxes now. I mean, everything from last year, we're just getting to now. I mean, it's a delay.
Now, to be clear, if anyone wants to nitpick me, yes, I know there are ways to elect for a different tax year for your estate, but not everyone does that, and there are other reasons why you might want to avoid that. And the default, if you don't make that election, is the April 15th tax year. So, just letting you know that we are aware of that. All right. So, the final reason why tax clearance, causes estates and probates to take so long. Is you need to make sure, don't forget to get your Form 5495. All right, now we're getting a little in the weeds here, but this is an important one, so it's worth...
This is such a big deal right now. Yeah.
So if you look it up, if you just Google Form 5495, you'll see that the name or the title of that form is Request for Release from Personal Liability by an Executor. This is the form. You asked earlier, Janice, what exactly do I mean by tax clearance? This is it.
This is it. This is the one we are waiting for and must have.
So when you file your 1040 or 1041, which is the estate income tax return for your estate, for your deceased person, you accompany it, you attach to it your Form 5495 that says, hey, here's a final return. By the way, I am the fiduciary, I'm the executor. I want you to bless this and let me know that I'm clear. And you're never going to come after me as the executor for this money. Okay? So you just understand, you have to ask for this. The IRS doesn't just send it to you.
No.
Now, here's the thing. The IRS takes a long time with these lately. And if anyone...
I don't even know if long is the right word. Is there a word longer than long? Like, long.
So just to give you an example, for those of you watching on YouTube, I have it up here on screen. This is a real letter we got recently that says... we received your request on October 8th, 2019, right? And I'm gonna sort of, summarize it here. We will notify you by August 15th, 2020.
Yeah, 1 year.
Right off the bat, they are just saying right off the bat, it'll be at least a year before we take a look at this, right? And if you're saying, okay, cool, you might be thinking to yourself, I'm reading this letter and I'm seeing that, okay, at least I know that by August 15th we'll be done. No, No.
Sorry. Nope.
So we've had this happen recently. We've had these long waiting periods. And then right before that, that date, in this case, August 15th, 2020, they'll send you another letter that says, we need 90 more days. And then at the end of 90 days, which would be what? So August, September, October. So on August, hold on. September, October. So December 15th or like December 14th, we'll get another letter that says, we need 90 more days to review. Right?
Yep.
So we're stuck in these very lengthy holding patterns. And Janice, I mean, how many of these have we seen? Just several, right? I mean, it just happens to be going on, yeah.
I have found, correct me if I'm wrong, but it seems like almost everyone recently, that's what we're getting. Almost everyone. I haven't seen any that have been, just here you go. Yeah. It seems like all of them, you're getting the same letter. It's almost like they now have a new form letter that says, give us a year, and then we'll add more time. I mean, honestly, I've never seen it like this. It's usually used to be, 60 days in theory, and keep adding a little more. Yep. I haven't seen that in a long time.
So I sympathize with clients or beneficiaries who are saying, the house was sold a while ago. Where is my check? Or where's the rest of my check, at least, if it's a smaller leftover reserve. And I sympathize, but, part of the reason why we're recording this is to help explain, this is what's going on. We're frustrated too, and we're just waiting for this. I mean, I think everyone agrees, don't mess with the IRS, right? Right. So all we can do is wait. I mean, we try our best to follow up and prompt them, but we don't, unfortunately, we usually don't have any special phone numbers or counterparties at the IRS. We're dealing with the same teletype, or what do you call it? The, phone prompts as you are.
Yes. Yep. The phone tree. And what's the phrase? You don't poke the bear, so we can ask, but you really can't. I mean, honestly, you do get the question all the time. Well, what can you do? What can you do? The answer is nothing. Yeah. We did everything on our part. We just must simply wait, which stinks for everyone because we don't like.
You don't have to wait. If you're a client who wants to close the estate and you're the executor, you can do it as long as you understand the risk that you are personally liable for any taxes that the IRS digs up during this waiting period. So I'm not saying you can't do it. I'm just saying most people wouldn't take that risk.
That's a big risk. I mean, like you said, if they come back to you and say, hey, guess what? We need $10,000. Not sure about you, but it's not really something I can just write a check for. Yep. And even if it's a year or two later, if you did inherit a little bit of money, that may be gone.
Oh, and final point for anyone who asks or wonders, my aunt was really responsible. There's no way. I feel comfortable. Let's just do it. It happens. We've had plenty of instances where, very responsible. This doesn't have anything to do with responsible or irresponsible. It has to do with how deep the IRS digs. And pretty much, I think it's pretty safe to say everyone makes a mistake here or there on their taxes. It's just a matter of whether or not the IRS picks it up and whether or not it'll snowball through interest and penalties into something substantial. And we've had instances where during this waiting period, the IRS has found $7,000, $8,000, $15,000 bills that we've ended up having to pay. And it was really, really good for the executor that we didn't prematurely pay out the estate.
Absolutely.
Okay, that's it. That's all I have on this, Janice. And I hope this helps our clients who or beneficiaries who are wondering what's going on.
I hope so, too, because we really do empathize. I wish that it could be a little bit quicker. It's just there's nothing. Our hands are completely tied with the IRS. So if you want to learn more about this whole probate process, I suggest Anthony's book, How Probate Works, available on Amazon. And Anthony, I think that's it for today.
Very good. Again, you can move forward if you want to. There's nothing in life that, there's no can't in life. It's just a matter of how much risk you're willing to take.
Yeah. I don't know about you. I'm not a huge risk taker, especially when dealing with the IRS. No, they're not one I'm going to gamble with because most likely you're going to lose.
Probably. Okay.
Yeah.
All right. Thank you, Janice. Hope everyone found this helpful, and we'll talk again next time.
Talk soon.
Take care.